Well, hello there. This is Mitch Goldberg. We are live. This is something we do every Monday, Tuesday, Wednesday, and Thursday afternoon after the stock market closes at 4 o'clock. But I'm here every day, 4:30, just for you. Welcome to a new episode of Be the Boss of Your Money. And today, especially, it's really important to know how to be the boss of your money because your money could very easily become the boss of you. In fact, your money could actually kick the heck out of you on some days, and that is what we need to avoid. So this is Mitch Goldberg. I greatly appreciate you joining me. You're watching Be the Boss of Your Money. We talk about the stock market, investing tips, investing know-how. We talk about business. We talk a lot about personal finance. I have really cool guests who join me who really just do a ton of education with us. So you are at the right place to become better with your money, to be the boss of your money. So I want to thank you for joining me. So what the heck is going on? I take 1 week off last week and all hell breaks loose. Literally, it was the first vacation. It's the first vacation that I took in 2020. The first one. I'm out last week. Listen, I know we had the pandemic. I know we have the pandemic, but we had everyone had to work from home, the stay-at-home work from home. I didn't have any time off. Oh, look, I'm not saying you should feel bad for me. I worked very hard at that time. I was very busy. The stock market's open. Clients have their personal financial goals, personal finance to take care of, and it goes on. Not to mention the kids at home. You know the deal. We were all so busy. Finally took a week off. End of the summer, I'm like, I better get some me time, some self-care time in, and all hell breaks loose. So we've got a lot to catch up on. I have not been on the air for over a week. I have to tell you, last week when I was out, when 4:30 would roll around, I'd feel weird. I'm like, I'm getting I'm getting chills. Like something's wrong. I need to be on the air live, talking to you, making you better with your money, making you the boss of your money. That's what this is. Be the boss of your money. I just felt like something was missing. So it is so good to be back. I really missed you. I hope you missed me too. Thanks for tuning in. So we're going to talk about the stock market. What the heck just happened? The NASDAQ could do no wrong. It was just flying high and flying high. And all of a sudden, just like that, I am Iron Man. Did you see that? The movie? Endgame? It was really good. A cool scene at the end. Hope I didn't ruin it for you. But look, you'll enjoy the movie. You'll see it. Black Panther was in it. All right? Last time we saw him. What a shame. Chad, right? Chad Boswick. So let's get into this, okay? We're going to roll the intro. We're going to talk about what the heck changed, what happened today. Is it worth holding on to these tech stocks? I mean, were they in a set of circumstances that pushed them to new heights, which we won't see again anytime soon, if ever? That's what we need to talk about. So we're going to roll the intro, if I could find it. Here we go. Stay tuned. This is going to be really good. All right, we are back. We are live. This is Mitch Goldberg with Be the Boss of Your Money. I am currently broadcasting to Facebook, LinkedIn, and YouTube. So I hope wherever you are watching, you get a ton of value out of this. This is the kind of day, the kind of week we're having in the market. I'm including last few days of last weekend today to say this is right now, right here, is when you are going to become a better investor. It's easy to invest in good markets. So I'm going to sprinkle an update, or I'm going to go through a quick update with perspective, and I'm going to sprinkle in the content of this live stream to hopefully share some wisdom with you and knowledge. I've been saying for a long time, I've always said this, the worst thing that could happen to a newbie, to a new investor, is making money right out of the gate. And I know that sounds controversial. I've said this before in this live stream. This is going to be a day when I'm going to be saying, I've said this before, okay? It's worth repeating, okay? When a new investor is right, makes money right out of the gate, it validates everything wrong with investing. It validates short-termism. It validates confusing trading with investing. It validates smarts over luck. People think, oh, don't John Kenneth Galbraith once said, a great economist said, don't mistake genius for a bull market. So people were validated. They felt very smart. I'm not talking about most of the people who watch this live stream. I'm talking about the Robinhood traders, the new people who decided all of a sudden, I'm going to trade. This is really easy to do. No problem. Look at this. I just buy Tesla. And all the people who are like, oh, it's the stock split. Maybe we should buy Apple. Well, just why? I'd ask why. I can give you a lot of good reasons why you could buy Apple, and I could give you a lot of reasons why you shouldn't. But what's your reasoning? It's going to split. I'm like, okay, so listen, a split doesn't mean anything. It just means, you have more shares, but at a lower price, but it comes out to the same value. It's like taking $1 and turning it into 4 quarters. It's the same dollar amount, right? It doesn't change the value. And people would respond by saying, but it's going to split. And I have to say, I would grind my teeth. I'd very politely say, I hear what you're saying. Let's hold off a little bit. I think the good news is factored in. And then stocks kept going up and stocks kept going up. I think, I know people got carried away. I've been doing this for 30 years. So I saw the market take a hit in 90. There were a couple of hits in the 90s, believe it or not. The 90s weren't as great as you think. The 90s didn't really get to be smooth sailing until like late 97. It was just the last 2.5 years of that decade when you had the tech bubble inflate. That was when, everybody was doing great. And it popped in 2000, and what took the NASDAQ over 15 years to recover. That's a long time to wait. Isn't that a long time to wait? I mean, if you think about that, you might not even want to invest, but that's what happened. And right now it reminds me of other bubbles, what's happening with the NASDAQ, with these big tech stocks. It reminds me somewhat of Bitcoin. Yeah, that's right. I'm comparing Bitcoin to what's happening now, to what happened the last 5 or 6 weeks, and the pot stocks that followed that. And I think we've been moving from bubble to bubble. And my own opinion is that we had a bubble in a lot of these NASDAQ stocks. And it wasn't just like, in the year 2000, where it was small companies going up and skyrocketing. You're talking about trillion-dollar companies, $1.5 trillion companies going, like Apple going from $1.5 trillion to $2 trillion, like a month or less. Tesla announces a split and the stock almost doubles. For what? For a stock split? Folks, if you think a stock split is so meaningful, I'm telling you, you're playing with fire. As you can see, Tesla had its worst day ever. The stock was down 21% today. We're going to go over this, how much Tesla has come down. It's really dramatic. And I'm wondering how many people got caught up in this. So on this show, we've been talking about investing, and I've consistently said, after we got off the bounce, the March 23rd low, we started going to March, April, May. We got into June and July. And after that, I said, hey, depending on your age, your circumstances, it may be time. And for most of you, it was time. And I was very forthright about this. I was very direct. It's time to rebalance. It's time to take a look at your personal finance. And congratulations on making so much money in stocks. But if you can't afford to lose that money now and give it back, this is a matter of personal finance. And this is how you should make decisions, by the way, not to say buy Apple or Tesla because of a stock split. You need to know how they fit into your overall portfolio. What do these stocks, these tools, contribute to your future financial well-being? That's how every decision should be made. It shouldn't be made based on, oh, the stock is up, I should just buy it, or tech stocks are, just running like crazy, so let's just buy them because they're going up, and you get caught up in it, and you see your friends making money. We're talking about the Robinhood traders, not people who are just investing in a 401k, or people who've been at this a long time, but you see other people making money. You see it's easy, and then you see all the options buyers come in, and I know when I work with clients and we decide to use stock options as a tool, they have to jump through some hoops. They have to meet minimum requirements of experience and or net worth and or income. It's not just a matter of you want to buy options, and there's limits. There's limits to how much in options you could buy. Like if you decide you're going to trade options with me for the first time, and I use options as a tool, not as a trading vehicle. There's a difference. But I'm not going to just let you say, hey, let me put buy 50 contracts, put $200,000 in an option, when that's like your entire account. I guess I think maybe financial advisors were a little undervalued over the last couple of months. Thank you. James is out there. Thank you very much, James. Thank you very, very much. And I think financial advisors had a part to play when the market was tanking last February and March. But once it got easy and stocks were going up, and there's a whole bunch of things that took place. Davey Day Trader, Dave Portnoy from Barstool Sports, who I happen to like, and I find him very entertaining. And he will be the first to tell you that he's doing all this. It's all about entertainment. And then Robinhood and partial shares, fractional shares, and free trading. All of these things, and it wasn't just Robinhood. It was all over. I wrote an article about this a few weeks ago. Maybe I'll post it in the comments. You'll take a look. That there were Robinhoods all over the world. Companies like that, they're offering easy access, free access to trading. And I think the ability to invest, I like when the barriers go down. I like when the friction is taken out of the process. I like it when investors get a good deal. But getting a good deal on a commission is a transaction. It's a result. I think when you work with a financial advisor, you're getting something that's process driven. Trust the process, the results will come, as opposed to, I need to see results right now. I'm not getting results. There's a difference. And we'll have to talk more about that. Jay is out there. It's like when a craps table gets a huge crowd around it, inevitably the person that bets the don't come line gets paid. Absolutely, my friend. That is from a man with experience. Jay is the biggest hedge funder I know. I mean, literally, he's huge. He's like, what are you, like 6'10" or something? Just a massive man. Anyway, thank you, massive man. You should get like a shirt, MM. What's that for? MM? No, massive man. Yeah, I'm feeling a little goofy. So I was out for a week, and all hell breaks loose. So let's just take a quick look. We'll do a share screen, and I'll show you a couple things that we need to look at with a little bit of perspective. Make sure we walk away better today. Like I said, folks, it's these down markets that makes you a better investor. When things go up and up and up, you start to think you're really good, but you're actually lucky, and you're not really learning anything. More than half the time, stocks could be in correction to 6'3". Let it be said, Jay is 6'3". You have a tall appearance, okay? Yeah, totally. LOL. So let's learn from this, okay? The Nasdaq has pulled back 10%, but if you take a look at some of the tech stocks, you take a look at a Slack, you take a look at a Tesla. There are a lot of very popular stocks that investors were buying that are down way, way more than 10%. And the set of circumstances that lifted these stocks, and I've always said this, is don't look at just the price of a stock. Look at the circumstances that were in place that lifted a stock. If the circumstances go away, and you were in that stock for those circumstances, then you have to get out. It's different for an investor. If you're an investor and you're in for the long term because you believe in the company and they'll deliver results that will ultimately be reflected in the stock price because you're trusting a process, different story. But sometimes stocks get so out of hand. I just really want to make sure people protect themselves. Okay, so the Dow is off over 600 points. Two and a quarter percent percentage wise. I mean, it's a big down day, but it's not out of the ordinary. S&P was off almost 3%. The Nasdaq down 4%. That definitely gets my attention. The Russell 2000, the winner of the day, only being down 2%. So the Russell 2000 is small cap companies that are more domestic in nature, and the VIX. The VIX is something we track a lot here. The line in the sand for a long time, I said was 30. If we could get under 30, stocks rally. It happened. And then I said 25 is the new line in the sand. It was hanging around 22, 23. Before I went on vacation, you guys let this whole market fall apart. Thank you very much. And I said, we don't want to see this go back up to 30 because if it does, that could be a meaningful sign that fund managers, professionals, hedge funds are paying more to hedge their bets. A lot of worry. And when there's a lot of worry, sometimes professional investors don't just hedge their bets. They actually just want to liquidate stocks and go to cash. So now you see the VIX here above 31. So we've got a lot of work to do, a lot of repair work to get this VIX back down to the low 20s and to get stocks back to where they were. Okay, so let's take a look. Tesla falls 21%, worst single-day loss in its history. That says a lot because Tesla has had some big, wild, crazy trading days, okay? But where was that stock at its all-time high? I'm like afraid to look, all right? The company, Tesla shares closed down 20%, making it the worst one-day loss on record. Tuesday's drop knocks it down by roughly $82 billion. $82 billion of company worth knocked off in a day. I mean, these are just staggering numbers, and I could give you all the reasons why Tesla is down. Listen, they're not comparable in size and efficiency to Toyota, even though Tesla's worth a lot more now, or it was worth a lot more than Toyota. So Tesla is down $88 a share. That's a hell of a day. I just want to see what the high was. It's taking a little. When you live stream, your computer runs a wee bit slower. But Tesla down $88. So people thought, wow, Tesla's splitting 5 for 1, so it must be a buy. We have to buy this stock, and this is what happens. Okay, Ryan is out there. Ryan said, I met someone who was 7'6" once. Wasn't in hedge funds though. Okay, not a hedge funder. Well, you know what I learned. Abdul Jabbar, when he was in 8th grade, he was already 6'9". I mean, can you imagine playing basketball in 8th grade and being 6'9"? I mean, you're like, you just walk around with the ball. It's crazy. Okay, but enough about height. Okay, Tesla was at 170 at the high. Thank you. Very, very much for your input there. I'd like to get my screen to move a little more. So I just want to see what the high. Tesla was at 502. And now it's in the 330. It's like a $50 stock going down to $33 a share. That's what I wanted to say. This is pretty dramatic. Will we see the same set of circumstances make it go back up again? I can give you all the reasons why it went down. It wasn't, profitable enough. The money that they made was not operating profit, is because they were selling the tax credits for the electric vehicles, for being environmentally friendly. They were not included in the S&P 500 because of that. People thought they would be included in the S&P 500, so the stock got knocked down for that. And all of a sudden, you're sitting on a company thinking, what the heck was I thinking? I should have known it was way overvalued, and that's what happens. I talked to you guys about this, about taking profits in these big tech stocks, which I put my money where my mouth is. But on days like Thursday, Friday, and today, I took some off on Apple and Amazon and these other big stocks. I did this for my clients. But days like the last few days, it's like you wish you sold more. You're like, what the hell was I thinking? Not getting rid of everything. It's just days like today, you can't get rid of stuff fast enough, and you can't sell stocks fast enough. That's what happens. So FANG stocks, which are a big part of the market, almost 30%. Facebook down 4%. Apple down 6.7%. Amazon down 4.3%. Netflix down. Google down. Microsoft down over 5%. These are really big drops. So when the FANG stocks have a hit like this, it's just there's no way the rest of the stock market's going to be able to move. By the way, folks, if you have a question, if you're watching this and you have a question, go ahead and ask me in the comments. I'd love to answer it. And if you're watching this in the replay, welcome to you as well. And I'll see your questions in the replay. So hit me up in the comments, and I'd love to get back to you. That's actually my favorite part. All right, so there's a couple lines in the sand. I'm into round numbers for stocks, but Facebook, the big number is 250. Facebook broke. I have my notes here to talk about all these things. But Facebook broke through 250 in late July. Apple broke 100 in late July also. So these stocks, just by giving back, 5-6 weeks of sharp gains, would actually be lower than where they are now. Okay, Amazon, the line in the sand is 3,000. It hit 3,000 in early July. If it goes below 3,000, Facebook 250, Apple, let's say 100. The reason I'm using these numbers is because in my mind, and this is just my experience. I don't have what's the word I'm looking for? I don't have quantitative knowledge here. I'm going by my own qualitative. I'm going by my own qualitative thinking here. Okay, that when you get to a point where investors not only give up the gains that they had, but they start to get scared and they want to protect what gains they have left, or they start losing principal, that's when people become really frightened and they start to sell. Like you think you've been seeing selling now, we could see a lot more selling. So what I'm saying is there's lines in the sand for stocks, and I think for Amazon, if it breaks below 3,000, that's when people are going to start to say, well, I'm really starting to give back a lot of gains, and it's got a 2 handle, and I want to start getting out of that. Google, it's probably about 1,400. Microsoft, it's probably about 180, 190. So when these stocks hit those levels, that's when I think you could actually take another leg down. So that's what I'm looking at. Let's keep going here because I like to make these in 20 minutes. We're over 20 minutes already. My reopening stocks. By the way, Southwest Airlines was up over $1, but American was up a little. UAL was off a little. Delta was up. Carnival off a little. Norwegian Cruise is up. Royal Caribbean's barely off. Cinemark Holdings, movie theater chain, they have other issues going on, but that stock was down about 10%. But by and large, the reopening stocks still held up better than the tech stocks, the work from home, stay at home stocks. And utilities was the best of the day, but still down a little bit. Industrials got a little hammered, but financials took it on the chin. I hate seeing financials go down. And you see where tech is, the loser of the day. Energy, financials, communications, XLC, that's the big ETF that tracks the communication stocks. XLC is about half Facebook and Google, and there's also Netflix in it. Those are not in the technology ETF, believe it or not. So that's why you see so much of these things going down. By the way, hey, Sharon, it's good to see you. Thank you for watching. Hi, Sue. Always appreciate you being out here. You're always so supportive. Hey, Stacy. Stacy, great to see you, and I really appreciate you stopping by. You're always terrific like that, and I love seeing you out here. So thank you very much. It means a lot to me, everyone. So let's just take a look at one more thing. I'm not going to go through the full NASDAQ 100, but just to say that you're giving up a lot of gains, and that's what this whole thing is about. So we had a spark, and it seemed like when Tesla announced that they're going to do a secondary offering of about $5 billion worth of stock, more supply came in the market. There have been a lot of like electric vehicle stocks coming in the market. Just a lot of supply. Stocks were overowned. When I say that, I mean that mutual funds, individual investors were low on cash, getting high on, over more stock, less cash. Newsletters were getting bullish. Investors were bullish. Even after these giant runs, a lot of analysts were, like doing the Babe Ruth, pointing out for the home run and saying, "Oh, forget it. Tesla's up 100%, to over 400% or something. It's going to go higher. Apple's up. It's going to go higher." And you started to see these ridiculous price targets being set on stocks, and that's what happened. So we needed an update today. Hang in there. Rebalance. Don't just have tech. There's more to life than tech. And this is why tech is considered dangerous, because they have the big ups, they have the big downs. If you have any questions specifically about portfolio moves, you're welcome to you're welcome to reach out to me. Ryan is out there. CrowdStrike in particular. Yep. We've got someone out there. Bloody Lee. Do you guess Tesla going to drop more than today? Well, Bloody Lee. What a name, huh? Bloody Lee. Look, if I had to say, yeah, I would say people are in the mode where Tesla's still a big winner on the year, and people would definitely want to protect their profits. Yeah, I could definitely see Tesla going down more. Don't hold me to it. Don't short Tesla and call me the next day and say you're wrong, you owe me money. I'm just saying that you have to think for yourself. But my opinion is that people will see how much they've given back. They want to protect what they have left. And now we're worried about a second wave of COVID-19 infections coming into the fall. School started. You see what's happening in the colleges. I know my kids started high school today, so let's see what happens over there. School on Long Island starts after Labor Day, so we start a little bit later than everybody else. But that's what's going on. I thank you all for watching, and thank you for the comments, and thank you, Ryan, Bloody Lee, Jay, good to see James, good to see all of you, Judy, Sharon, Sue, Stacy. Judy's my wife. Thank you. Okay. Anyway, I'm going to let you guys go. I'll be here tomorrow. We'll have more information for you, but I hope this helps you get a grip on what's happening. Don't panic. It's not too late to rebalance. It's not too late to take some money off the table. You really have to look at your personal finance, how much risk you can take. You have to look at your age. You have to look at all of these things and then make a decision on what the right portfolio for you is. The right portfolio is not necessarily just owning stocks that are going up every day, because you can see they turn around. The right portfolio is the portfolio that's right for you based on your time horizon, your risk tolerance, and your goals. Bloody Lee has a quick question. Are there any reason Nikola skyrocketing today? Yes. General Motors announced that they're taking a big stake in Nikola, so that's like the one bright spot of the day. I think they're taking a 20% stake. I have to double check the news. It's like already old news, believe it or not. I saw this like 7 this morning. GM is taking a big stake in Nikola, but that's the news, and that's why that stock is moves so much. The one bright spot in a very, very speculative SPAC stock. SPAC is a special purpose acquisition corporation. It's just a way for companies to go public and bypass the usual IPO process. All right, I'll speak to you guys. Thank you so much. And I'm going to do what all the cool YouTubers do. All right, you ready? I'm going to do this, right? All right, I'm going to say goodbye like this. Peace. Did that work? I'll do it again.